Hi there, my name is Hedonic. I'm a top 1% instructor online with over 1 million students across all platforms, and I'm the founder of Problemio.com and the creator of Spark Token. In this video, I'm going to show you the real inflation rate and the erosion of the dollar, not the reported inflation rate, but the real inflation rate, so that you can see how quickly the value of your money gets eroded and why holding the dollar is a bad idea. And I'm going to use ChatGPT so that you don't have to take my word for it and you don't have to worry if I'm making any errors in the calculations. Plus, you can just make the same queries from ChatGPT on your own if you think I'm tricking you, right? You can ask it the same questions. But first, I'll show you. ChatGPT says there's an average inflation rate of 5.05%. This is the real inflation rate. I'll show you that calculation in just seconds. And what happens to your dollar? After 5 years, the value of your dollar has only 77%. Obviously, after 1 year, it has just under 95%. So if you had essentially a dollar, after a year, you only get the value of 95 cents of that. And as you can see, after 10 years, it's about 60 cents, and there's a logarithmic drop. How did I get there? Let's scroll all the way up, and I'll show you all the charts and all the questions I asked of ChatGPT so that you understand what's really happening here. Now, I could have made the inflation rate a lot bigger. Look at this question. What was the average inflation rate from 1980 to 2024? Can you make a chart or a table? And you see that there were some years around 1979, 80, 81, that inflation was very high. I actually am not using that in our average because I later asked it, can you take the average from 1984 to 2024? Okay, from 1984 to 2024, that's 40 years, and you'll see that we're going to use this chart. If you look at it not so closely, you will see that the red line here shows you the average inflation rate of just between 2 and 4%, just under 3%, which is really, really good. That's what's by many economists considered the goal, or more or less healthy. That's debatable of what's really healthy inflation rate. But this is the general goal of the US government, to have an inflation rate that's between 2 and 3%. And you see that here it says, here's the inflation data, and the chart average is 2.95%. Great. Now let's get to all the ways for how they're tricking us. How did we get to 5.05% when the reported is under 3%? I asked it, can you explain, this is for you, can you explain about the consumer price index and how inflation is calculated? Sure, here is how it's calculated. If you're not familiar, you can of course read what's on my screen, but I'll summarize it for you. Inflation is a number that's taken by something that's called the consumer price index, which is a big index, as you can see, a big list of items like food and beverages, housing, apparel, transportation, all sorts of things that people consume. It's like a weighted average of all those things. And the government measures how much did the price go up by, depending on how much demand there was for some things. It's a weighted average. And here's the formula if you want to know how it's calculated. But what we really want to know is right here. You see, the CPI is not perfect. It doesn't account for substitution effects or many other things. So what we'll do now is start adjusting for all the ways that this consumer price index is getting manipulated by the government. I asked ChatGPT, are you able to make the calculation or an approximation to allow for the deflationary nature of technology? The reason for that is that the deflationary nature of technology makes it seem that the prices are going down, but it just masks the speed at which everything else is rising. Here's what I mean by that. If you wanted to buy a cassette tape in 1984, it would be expensive. Today, it's worth pennies, unless it's an antique item, but VHS, big TV, those would be really, computer, those would be so expensive. And all technology generally goes down in price and actually gives you more value for this if it was the same price. Like a phone in the past was just a phone in 1984. Today, your phone is the music player, the entertainment machine, whatever, a million things. And so you can't, it's apples and oranges. And because technology is deflationary, it actually goes down in price, but it doesn't go down in price because the economy is so good. It's just because of a coincidence. So we have to remove that. And here it answers about the deflationary nature of technology. You can read this on your own, of course. It's all on the screen. You can even ask this, as I mentioned earlier, on your own to ChatGPT, just to make sure everything is honest and transparent. So it calculated that there's an increase in real inflation, and the adjusted CPI is no longer under 3, it's 3.68. Okay, that's fine, but there are many similar ways that the government manipulates the CPI to bring that number down. One of the ways is simple product substitution. Like if some product is getting really expensive, the government will say, it's so expensive that maybe people are not buying it anymore. Like if people were buying steak and steak got so expensive that people are just not buying steak. They're becoming vegan, or they're buying chicken or turkey, which is cheaper. And so people will say, oh, okay, people are changing their consumer behaviors. Other things are preferable, but it's not because they're changing consumer behaviors, it's because they can't afford these things, because steak has gotten too expensive, and so they're weighing steak less. There's all kinds of manipulation like this, and you can go down the list here. Because I asked ChatGPT this question about price adjustments and the deflationary nature of technology. Then I asked it to make calculations, which you can see. Then I ask it, now we should account for the swapping of the non-technology products which are undergoing inflation with ones which are seeing stable prices. Essentially, the price swapping out is how people manipulate the consumer price index. It's a commonly known manipulation tactic. Here is the explanation from ChatGPT, substitution in CPI. The CPI tries to reflect what consumers actually buy, like I explained. So if steak prices rise and consumers switch to chicken, then the CPI reduces the weight of the steak, but not in a natural way. And it increases the weight of chicken, and so this actually has a name, hedonic substitution adjustment. When we simulated this, we added 0.3 to 0.5% to the consumer price index, so the real inflation is rising and we're getting closer to the real number. Then, of course, I asked, okay, well, what are the other ways CPI is manipulated? And it explains more about hedonic adjustments, substitution bias, changing the basket itself, like, for example, like new items that come on the market, like streaming services that are cheaper than cable TV, just totally different and new products and services that are just cheaper than predecessors. And when people swap those in, they're like, oh, things are getting cheaper, they're amazing. But it's not because of the economy and not because of most of the underlying items. They're bringing down the average inflation because the other items are going higher, but we're only seeing the total average, and so we're seeing a manipulated number. Then there's additional ways that inflation is manipulated, like owner's equivalent rent, OER. It's confusing sounding. Instead of measuring actual home prices, CPI measures how much you would pay to rent your own home based on surveys. Based on surveys, of course. Come on, that doesn't even sound legitimate. The problem that the purchase prices have soared, but that's not reflected, right? Home prices have soared, but that's not reflected in reported CPI because that number that the home prices aren't the home prices in the CPI, they're potential rental, not even real rental, based on surveys. Also, core CPI excludes food and energy, weighing effects, and many, many other things. And this is actually how we got to that 5.05% real inflation. So you can see the erosion of your money, because approximately after 1 year, you only have value of 95%. After 2 years, 90%. Holding dollars does not help you. It's losing you money. If you're thinking, this investment is risky, that investment is risky, it's also risky not to move by 5% per year. What to do? What's the solution? There is no great solution. You can't just put money in the bank. Right now, my bank CD offers 4%. Fantastic. So I'll only lose 1%. It's less bad, but I'm still losing value. Even if you say, I'll buy a home. Okay, you can buy a home. But the home will appreciate because it's measured in dollars. And the dollar is losing value. So you need more dollars to represent the same value, meaning even if your home actually doesn't appreciate in value, it will still rise in how many dollars it takes to buy it. So home actual price number will always go up because it's measured in the dollar, which always goes down. And one thing you want to is instead of owning cash, which is going to go down, and the dollar is a great example because it's actually stable. Imagine if you owned the Turkish lira or another currency that's weaker, you would see incredible erosion of value. So holding cash is a bad idea. The solution, one of the solutions, is to, instead of holding cash, to hold assets. What's an asset, you might ask? There are many different kinds of assets. One kind of an asset is a stock. Another kind of an asset is a home. Another kind of an asset is a business you might start. Another kind of an asset is a product you might make, maybe a digital product online. It's an asset. Some assets don't cost you anything to maintain, like a stock. Some assets cost you some time to maintain, like a digital product. Some assets cost you actual dollars to maintain, like a house. If you own a house, yes, the price of the house will go up, but every year you will pay insurance, property tax, which is big, upkeep, all these other costs that just eat away at your profits. You might say, okay, I'll invest in the S&P 500, which is actually a good investment because the S&P 500 on average tends to grow 11%. If you even take out the real inflation, it will still be growing and you will be making money, just not nearly as much as you were thinking, 11%, but still it's one of the better assets to own. Now there's another asset to own, which is cryptocurrency, which does not require upkeep, and depending on the cryptocurrency, does not have inflation at all. Now, that depends on the cryptocurrency. Bitcoin is made to not have inflation. Other cryptocurrencies have inflation where there's more of that token that is printed. But cryptocurrency has a mechanism to provide extra rewards to holders that are sometimes called airdrops to make up for the inflation in whatever token you might be holding. And beyond airdrops, there's things like staking and other techniques that help the holder, the investor, actually make money faster than the inflation rate of that token. So you're not only holding the investment, holding the asset, and benefiting from the actual appreciation of the asset, but there are other ways you maybe even earning more of that asset. And that's the value of cryptocurrency because it has the best of many of these older world investments. The best comparative one, arguably, because in mass, there may be smaller types of investments here and there, but in mass, the S&P 500 is great. doesn't require upkeep, can even give you a little bit of dividend, grows out and outpaces inflation, even real inflation. So it's actually one of the better ones. Most of the other ones, owning a home, if you do the math of inflation and all the taxes and even the taxes after you sell it, you are lucky to break even if you do the right arithmetic. So that's inflation, and that's the types of assets which protect you a little bit, not protect you at all, and the case for cryptocurrency that it does protect you from inflation. Cryptocurrency may have other pros and cons. It's volatile. It has this issue, that issue, this issue, but it does protect you from the erosion of the value of your money, from inflation, which is what I really wanted to highlight here, is how poisonous real inflation is and how far-reaching it is. And just to give you an anecdote from my life, I live on the East Coast of the United States. 10 years ago, 15 years ago, I was able to go out and have a dinner for two for $30 plus whatever tip. Today, the same dinner for two is $70, $80. If I get an extra little thing, it's over $100. It's real inflation that I'm feeling in my own consumer behavior. It's way more than even the real inflation. So that's the example. You'll see that in many aspects of your life and your consumer spending habits, inflation is really, really running away. And what you want to do is, instead of holding dollars, start thinking about what assets can I hold that protect me from inflation, that don't require upkeep, and that have a chance to outpace real inflation, so that I can not only preserve my wealth, but in earnest have my money work for me long term.